How would you draw out the Fab Four if you were trading futures since it doesn't close overnight? All right, that's a good question, actually. I mean, there's a misconception that some markets don't have an open. And the way I interpret what an open is that even the Forex market, which you're talking about, or futures market has an open. So even if a market trades 24 hours, guys, and let me see if I can find this for you. Maybe see, I can show you a chart with this. Every market, even if a market does not have a specific open, like the market closes, the market opens, you can still find what I consider to be an open, which is a tight, narrow state. So let me just pull this up for you off the open. So this is the open. So if you look very carefully, you'll see that this is the open on the 8th here. And this bar is your opening bar. Now I want you to look at the state, what I call the state. The state is really a quick and dirty way of finding this, what kind of state your stock is in, is the distance between the 20-period moving average, which is the blue line, and the 200-period moving average, which is the red line, right? So notice the distance is very tiny. That's space. That space between your two key moving averages, the 20 and the 200, indicates that you are in a narrow state. Why this is important? The best trades of your life will come from a narrow state. And you can see AMD had a narrow state, boom, and had a very, very nice whale complete, or what I call a two-legged move, or whale complete. We call in my program whale complete. You want narrow states. Narrow states, narrow, flat. The flatter the state, the better. So here's a state that's wide. Here is a state that's wide. And here is a state that's narrow. This is an opening state. Narrow states are the same as an open, no matter when they happen. It can happen at midnight in a market. A narrow state can happen at 2 p.m. A narrow state can happen at 3 a.m. in the morning. So even if your market doesn't have an open, you're looking for when your market goes to a narrow state. If I can show you this, maybe I can find very quickly, I don't want to waste a lot of time here, but maybe I can find very quickly a narrow state that happens even during the day, because you don't need an open. So all you need is the space. All you need is the space between your moving averages narrow. Even this could be considered a narrow state, 20 and 200. They don't have to be close, just narrow. And this is a wide state. Now, if you throw the stock in there to create a 3-item narrow state, that's even better. So here's your 20, here's your stock, and here's the 200, and all 3 items are close together. Now you have the optimal narrow state. And when all 3 items are not close together, you have a wide state. But your best trades will come from a narrow state. See, your best trades will come from a narrow state. So if you can get this concept that markets go from narrow to wide, back to narrow, back to wide, back to narrow, if you get that simple thing, guys, star. That's one of the foundational principles. Get that right, and I can make you a star from there. Narrow to wide, back to narrow, wide, back to narrow. And you don't need a real open. You don't need a market to close and then open the next day for that. All right. You don't need that. You need just the narrow state. So I hope you understand that. Just the narrow state. And the 3-item narrow state, where all 3 items are close together, that's your open. Take your 3 items. Look at your items here. You have your stock. I'm going to put a circle on each one. You have your 20-period simple moving average here, and you have your 200-period moving average here. These are the 3 main items. Now, are they close together? No, they are wide apart from each other. All 3 items. That is a wide state. Contrast that to this. Here's your 20. Here's also your stock. And here's your 200. This is relatively close together. So contrast that to this. I'm going to put this in a column. Now look, narrow state, wide state. Your best trades are going to come out of a narrow state up or out of a narrow state down. You'll have to determine which one it's going to be, which one it is. But your narrow state can lean down or break out and lean up. But all markets do, guys, is do this. Look, let me show you. From narrow state up to back to narrow state like this, or from narrow state like this, down and back up to narrow state. And if you look at any chart, you see it going narrow state, wide state, narrow state. What makes it confusing sometimes is that the levels are not the same. So look at your narrow state here. I'll show you. All of this is the same concept. Narrow state, look at how narrow the states are. The state is here. Wide state. We go back to the narrow state. We go wide again. We kind of go back to narrow. We start to go wide again, then back to narrow. So you had the wideness on the downside first. You went here too. See, so the confusing thing is that sometimes wide is very wide, back to narrow. Sometimes wide is less wide, back to narrow. Sometimes wide is even less wide, back to narrow. Now we're going wide this way, back to narrow, wide again. But every movement is really either this or that. What confuses people as well is when you are in an elongated that before it does its next one. So this can confuse. What can also confuse here is that sometimes the bottom is V. The bottom is a V sometimes. Sometimes the bottom is longer. So the bottoms can be different durations. The tops can be pointy. The tops can be flat or rounded like. So this one is pointy, more pointy. This one's more pointy. But it's still all the same thing. And it doesn't matter what stock you pull up. I can pull up Tesla for you. You'll see it on the micro. You'll see it on the macro. It's just the same thing repeating itself, whether it's in the macro form or the micro form, right? Now you're going this way. It's the same pattern over and over again. And we number these. So this is 1, this is 2, stage 2, this is stage 3, and stage 4. So if you know how to identify stage 1s and 3s, you will be a wealthy market participant because your biggest moves are 2s and 4s. So for instance, those who knew that here's the 6th, right? Here's a 6th. Those who knew that that most of the 5th spent its day doing a 3. Here was a 2. Here's a 3. The following morning, late in the day you drop, the following morning continues the drop. The traders who knew this is a 4 bets down for the 4 to complete itself, because 4 always follows 3. Now, some people say, well, Oliver, no, 3 can go back into a 2, and they're wrong. So they say, no, but I see this all the time, Oliver. 1, 2, and 3, but this is not a 3. That's a pause. There's a difference between a 3 and a pause. So you have to be able to determine the differences between what a brief pause is moving into, this is still a giant 2. The same way, this is just a pause in your 4. So this is a giant 4. Here's a giant 3. Here is a giant 2. Now you're back to 1, right? This is the only thing markets can do, guys. Can't do anything else. Up or down.